This is the talk of Music City Real Estate.
Welcome back to another episode of the Talk of Music City Real Estate,
where we educate and motivate all things real estate.
My name is Monty Moore with Realty One Group Music City.
Hey, and I'm Carrie Ann with CMG Financial and my mortgage team.
Every week we'll be posting a new episode chock full of Nashville real estate value.
Yes, and you can follow along and subscribe at talkmusiccity.com.
Got a question for us? Ask away at questions@talkmusiccity.com. That's questions@talkmusiccity.com. Jason Hoover's in the house. Jason, good to see you, sir.
Hey,
hello,
how's it going?
Always a pleasure.
Hey, welcome back, Carrie Ann.
And Carrie Ann,
Thank
all
you.
the way from downtown Hawaii. Man, oh man, I heard you're a world traveler.
I've been gone forever. Lord, check that off
But at least
the
it's a
list.
fun trip coming back, right?
Oh, Lord. Coming back? No. Oh, goodness. But, you know, I was with my mom, and it's always an adventure when I'm with her. So we made the best of it. And this little 5'11" with her backpack running, and she can't really run. And we're trying to get from gate to gate. Oh, my goodness. But we made it home safely. We were supposed to be in first class because I wanted everything to be 5 stars for Mom because this was our memory trip. And we got kicked off that plane because it was completely... they canceled it, and then they demoted us to coach way in the back.
No way.
And we had to go 8 or whatever hours in the middle seat. And so that's kind of why I did the video where we were all like squished, and my poor feet swelled up over my shoes. It was so funny, but we made it home. And we're here. And then she had to fly out for her cancer treatment in
God bless her.
in Houston, and then all of her scans were clear, so
Awesome.
it made for a
Thank you, Lord.
perfect ending of the trip. And then she's coming back this Saturday because her grandson turns 2 years old.
And she's quite the traveler.
She's just a
Holy
traveling
cow.
bee. Love that.
Wow.
Love that. But, you know, it is a blessing when we get to spend it with our loved ones and create lots of memories. And so I do wish that upon everybody, just not the 2 weeks of
I
pure
can think of other
chaos.
things I'd rather be doing, you know.
Let me say, a palm tree is a palm tree is a palm tree, and you can see it in Florida. And the white sand in 30A is grand, I hear. So, you know, we might be changing it up.
What I want to know is what were you doing in Hawaii other than to hang out with Mama? Was there some sort of big event going on there?
Yes. So really blessed to be awarded the #1 loan officer for Family Served and mortgage team for Family Served out of the entire company. And we're a national company now, which is kind of exciting. And so we had a big awards evening. And I also, many of you know that I coach and train loan officers. So I had the opportunity to be one of the speakers out there as well, and speak with all the loan officers that won as well. So it was great. We had 200 loan officers out there and celebrating all their success. And they took us all the way to Hawaii to do that. So it was a good time.
Wow.
And lots of great news, you know, with the interest rates rising and inventory low, you'll probably see in the news that Costco just removed their mortgage opportunities there. You're going to start to see a lot of the big banks laying off multiple people just because you know, I'm really grateful for someone so many years ago to teach me about be purchase-centric, focus on being the purchase business
instead of
refinances. Yeah. And a lot of loan officers would go for the easy hanging fruit, call their friends and or, you know, get the leads and just not have to do that extra work to create those relationships, you know, and really do that purchase business, because it is a little bit different than an easy, you know, refinance, just picking up the phone. And so now you'll start to see that so many of those larger shops, those big banks, were really focused on the refinances, which we had for so long, and now those basically are gone, so they're going to start to close up. So grateful to still be where we are today and really focused on our relationships with our real estate friends. So
good to have you back, Carrie Ann, and your team held down the fort while you were gone.
Yes,
you know.
yes, they did.
Brittany's amazing. She does an awesome job. So glad to hear that she's getting some help as well. That's
yes,
awesome.
we added another senior player because we know how amazing your group here is at ROG, and so we want to continue to support and help and serve many more families with you guys.
So what I really like to do today is, you know, you are one of the most successful people I know on the planet. And even during, you know, crazy times, I think one of the things that anybody who really wants to achieve high-level success has to do early on in their career, or hopefully sooner than later, is learn how to pivot in a world that is constantly pivoting.
There he is. Pivot. Is that Friends? There you go. There you go.
Pivoting
Name that note.
pivoting with craziness all around us, you know. And if there's ever been a crazy time to pivot, I think in today's world probably is, but you haven't slowed down a beat. Every Monday morning when we have our huddle call and you come on for a few minutes and you've always got something new and a reminder of something that maybe we have laid on the side for a minute because the market didn't need that or something. But it's incredible to me from my vantage point of doing this for so long that you continue to stay on the cutting edge of it and never become yesterday's news. I think that's amazing.
Oh, well, thank you so much. Being business owners, and I know you train on this, we've got to be the CEO of our own businesses to be very successful. So as a true CEO of a business and of your business, you want to be thinking 2 steps ahead, right? You already want to be thinking what's going to happen this summer, what's going to happen this fall. And so kind of knowing what the rates we're going to be doing, we had to already be shifting, pivoting. One of the sayings that I tell and coach with loan officers, which is really the same that you can use, what got us here won't get us there, especially this year, right? And so all the things that we did to be so successful over the last couple years, we probably add an extra little flair to that, or maybe do it a little bit differently, say it a little bit differently, because think about all the other people now that have picked up what you put down. Now they're saying the same things, right? And so now we've got to change it up. Or we just talked earlier, where, you created something so great and the best idea is a stolen idea. So that idea is now stolen and then they add their flair on top of that, right? And so what really makes you as a real estate agent and or as a lender, stand out in today's market? And so you're right. A lot of those great programs that were so amazing just got kind of pushed to the side only because the market didn't really allow for that. It wasn't welcoming.
Hot enough without it.
Yeah, and it's not really welcoming. Right now I'm talking about programs where we're preparing buyers for possibly not to do anything right this second, but to do something, in 4 months, 6 months, even 12 months, because the market is going to shift, eventually, hopefully, fingers crossed that we're going to bring back some opportunity. We were just talking offline that, they say that the largest group of home buyers are going to be that millennial group, the age of 34, right? And so that group right now there's so many that are renting, right? If you look at the statistics. And so that's going to open up the doors for so many more of us, which means that's that first time home buyer, right? And so they're going to be wanting a home after all these people have spent all the money and now are in a home. Now these people are actually, truly needing home ownership, and so hopefully also with the builders, we're about to do a builder show here in another couple weeks, but there's great builders, but guess what? They're not even letting you know that things are going to be off the ground, are going to be selling because they want to make sure that their prices are in line, right? And so you'll find that what used to be a 6 to 9 month build, we're doing them in 90 days because they're waiting that long until the house is prepared to get a proper price, So helping more of that affordable group as well. I'm in a lot of discussions with builders creating a product that helps more of that community too, that first time home buyer community. So I think there's still some greatness coming down the pipe, but what we do need to do is think differently, act differently, and I think we can still all survive and be very successful.
Yeah, you mentioned that age group, and an article that I read the other day. I don't remember the number, but it was staggering about the amount of college kids moving back home because they can't afford to live on their own. And, that's just because of the whole inflation and everything, the how much rent is. Obviously, you got the school debt that everybody's talking about. But, with as a father with a child in college and looking at that in, the next 3-4 years, that's concerning. And it also makes me wonder with that and with the multi-generational homes, how's that going to change the buildings in the plans, and how are they, there are going to be certain communities, I'm just curious of, where this is going to go. I mean, it's all speculation at this point, but it's just, we are in different times.
I was talking with a builder the other day, they have a 55 age community. It'd be great if they just had, I don't think you can do that, but more of an affordable community, more of that first time home buyer. Everybody part of this community is not an investor. They're all starting out, it's kind of the.
Did you see?
No.
That what was that one town that is trying to block investors from buying any more property.
Oh, really?
I forget where it was. I read it.
Give them an award.
Yeah, I saw that too. I can't remember where it was at.
Yeah.
I mean, I'm not against cash, but I do run a mortgage firm, so I kind of like a little bit of financing.
Prior to recently, I could count on one hand, and each year a number of cash deals I saw, and now it's like it seemed like 90% of the time. But that cash has got to be changing, I would guess. Now maybe waiting for this bump that everybody's thinking might be happening.
Yeah.
I don't know.
I mean, I was talking to another group that said they got an offer over $100 over, and then I'm on the huddle call the other day and everyone's like 75, 150. And I was like, oh gosh, I'm going to go back to the people I was talking to over here type of thing. But I think you're going to start to see it in little groups, right? Little areas, little sections, depending upon, what's awesome about what we all do in this business is we are in one of the largest states, right? So you're licensed in the entire state. I mean, clearly I talk about Middle Tennessee, so I'm an hour north, hour south, east and west and kind of thing. But there's so much right within that, window for us to be able to do and help. But you're starting to see growth moving here and, growth pushing out in that area.
Right.
It's
I think we're going to see those outside areas, obviously the ones that are affected first, I think, because people come to Nashville and they find out they maybe can't afford that and they go out to whatever their pain tolerance is. I think it's those outlying areas that we need to keep an eye on as how if prices, slow down there, it'll be a ripple effect into the center of
Exactly. Yeah. And that'll definitely help kind of move some things around. So with rates being as high as they are, I mean, the first time home buyer interest rate today, and again, they dictate those interest rates, it's 5.5, right? And so that seems...
You never talk about interest rate.
I don't, but I do want to share that we were maybe less than 3 2 months ago, right? So
2 months ago.
Yeah, we've moved up.
That's incredible.
And that's the highest increase.
It's the fastest increase.
The fastest increase from I think they said the 80s, right?
Yeah, I was thinking, I haven't seen that since way back. Way back.
That increase there. So, talking about that shock to that individual, is 5.5 a bad rate? No, you had higher rates, right?
15.5.
Exactly. I had 6.25 for my first interest rate. Yeah. So that's not
6.25.
Yeah. 29. But I mean that
I had 15.5 for my first one. Okay. So
but you also had a house that was like $30,000 there, Monty. Come on.
24,000 to be exact.
I mean, talking about it, we giggle because rates were so much higher, but also prices, of homes were so much lower as well. So now we're dealing with higher prices of homes and higher interest rates. But just working towards changing that narrative, getting people comfortable with not so much the rate anymore, but where are they comfortable paying? The rents are blank, right? And they're up.
And
so that's
up.
actually a benefit to us because they're going to be the highest they've ever been. But they're here. You can pay that, or you could live in a home for this. Now you wanted that, you do qualify for this now. So, we just have to change the way that we're talking, kind of remove the interest rate per se and talk about.
And with that in mind, one of the things we used to always sell on was, based on history, it looks like you'll be able to refinance this in 2 years and, the rate will probably be lower. I mean, there was conversation that way always that people went ahead and bit the bullet with the intention of when rates do lower, they can easily refinance.
Right. And that's something that I was on a call the other day. What goes up has to come down, right? So there will be a recession one of these days. There's rumors with one group that says it's going to be the end of the year. There's other rumors that says that's completely wrong and it's going to take, longer. Again, after that, rates will start to, make a shift in a downward direction. So with that being said, do you pay, all of this money to lower your rate today? Do you take advantage of, that year or two with an interest rate of blank and then focus on the plan of attack to refinance, when rates dip down? So it's navigating through. That's why talking with a true professional in the mortgage side is so important because they'll talk you through, this option, or that option. Because so many people just want the lowest payment today. Now, a couple things and the reason why I brought up interest rates, I want to talk about a couple things. So something that we never really did because rates were so low is there's something called a step program where we step you into what today's interest rates are, right? So let's say that interest rate is 5.5, just using a generic number, and that is on the THDA site. That's not a carry-in interest rate. But let's say that you can do a 2-1 buy down, which means that your first 12 months is 3.5. Then the second year is 4.5. And then you eventually get to 5.5, right? That's kind of that step program for those folks that aren't as comfortable with that higher interest rate, right? And that does save them quite a bit of money.
Don't they have to qualify for the 4.5, or where do they qualify in that?
Right. Now, they do have to qualify for the higher interest rate.
Okay.
Right. But they do get to have that extra savings. Now, you don't have to do a 2. You can just do a 1. And sometimes the 1 is an extra perk that we at my mortgage team are offering, right now, because it's a huge win for folks. The first 12 months is a little bit lower just to kind of ease you into that. So that's an option. The other
but you still have to qualify for the higher one.
Correct. Right.
This is not an adjustable rate mortgage where you qualify for whatever the
right. You always have to qualify. We want to make sure that you know that you're going to be comfortable and know what that payment is eventually when you do convert. But again, that would be your payment today, right? That's what the going rate is today. We're just giving you that extra little perk to ease you into getting to that, to that
a huge
step.
Deal.
That's
really
something that helps a lot of those first-time home buyers looking at FHA or even conventional, and or another individual that possibly just started a new job and kind of get reorganized, or you've got commissions and you just want to be able to save a little extra money. It's kind of what works best for you. So that's one option that we never really did a lot of, and we're doing a lot more of. And then a program that you're familiar with really shines bright when rates are high is our all-in-one product, which is the first lien equity loan, and that where focus is on principal before interest, right? And if you think about it, even though the interest rate on that program may be blank, you're only paying daily interest. So you end up only paying an interest rate that is so much less than what the going rates are, right?
And we're
so
excited about the fact that you helped us refi with that all-in-one.
Yeah.
Real excited about it because we have some improvements to do to the house, and at the same time we have any one time, 20 or 30,000 maybe sitting in a checking account that's just sitting there growing, basically, gathering dust. And now it's not doing that. Now it's working for us.
Absolutely. And so the whole program is created for all of your deposits. So as a real estate agent, maybe there's minimal deposit for 1 month, right? Or no deposits, or there's a lot of deposits. All deposits get shifted over and pay that mortgage down immediately. And so that mortgage the interest is only paid on a daily basis for what you have left and what you have due. And so that allows you to have the lowest balance possible until you have to make a car payment or a house payment, or a credit card payment. And then it starts to slowly increase. And then again, your daily interest increases for that particular time, and then it's combined for that particular month. So it does save you a lot of money.
When we looked at the details on this, Connie said, well, the interest rate's a lot higher than what we're paying right now. I think we had, when we bought the place, I think Sean got us 3.25 or something like that. Right. I said, in this kind of scenario, this is a huge trade-off. It ends up being less than that probably if you really calculated it out. Right. So who cares if it's a little bit higher? On the front end, on the back end is what matters, Right.
If you think about all the interest that you and I pay over, if it's a 15-year compounded, or a 30-year compounded, it is so much more interest. This program is designed and created to help you pay off your loan within, a 7 to 10 year period, right? Now, what's super cool about the program is you have access to your equity all the time. So there's some terms like equity builder, like you're building your equity, or a big thing that is shining right now is financial freedom, really creating your abilities to truly be free from your finances, but always still having equity, whether that is to start paying, the student loans like you referenced with your daughter in school, and or you need a new vehicle, or you want to do those renovations. You have access to those funds, or even purchase another house, right? You have access to those funds at all times.
That's one of the reasons why we wanted to get it, is because we wanted to be positioned where we can take advantage of a situation should it cross paths with.
So you look at me. So I had a first lien equity line that's attached to prime. Well, guess what rate's going up constantly, right? The Fed rate, which that's what it was attached to. But I utilized the lowest rate possible, which was very low for a very long period of time. Well, I'm going to be converting my loan as well into this program. Because sometimes you're like, oh, well, I like my cash and I want it for just in case. You have access to it all the time, which is great. So again, the all-in-one product is something, if you're a real estate agent out there, you would love to learn more about it. The thing that I'm talking with many folks about is, who's your financial advisor? advisor, because the more we can share this product with them, the more doors that can be open for you as a real estate agent.
You're a hero.
Thinking about referrals, right? Because you want to position them in the best, if they're not paying cash, right? And they're not everybody has it. And if we have it, I don't want to use it. Like, I don't want to use it. Like, I want to use it to get my house, but I want my money back, right? And put it back in the bank, or use it for a good purpose. So you can do the refinance on this product as well. So, and lastly, I'll say is the folks that have paid cash because they just want the home, there is something called a delayed financing option where they can pull their cash back up to 6 months. So there's a seasoning requirement, but that is the caveat, which gives you the permission to pull your cash out within the first 6 months. So
is that 80% of it, or what's the number on that?
Depending upon credit score, right? It kind of works through the details on the loan to value. But again, those real estate agents that, we're encouraging them to pay cash, you might want to add that extra value add, because they may want their cash back to do what? Buy another house with you, right? They could do that. Or they can save it for a rainy day. So there's a lot of good products that are out there, or coming back, because of the change in the interest rate. But I'm blessed to be in my profession, even though cash was king for that period of time. I feel like it's going to come full circle here.
You could have really done good had cash not been king for that length of time. Last year,
I giggle because we take an application for everybody, and for so long we would have to skate around. It did not matter what fancy car they were driving or whatever. And keep in mind, we never saw their car, but they would come across as if they had this and that, and we would have to skate around the asset section. Is that just money in, money out for bills? Do you have any money in the bank? I mean, we just go silent there for a second. And so now it's so much money. And talking to some other folks, I forget about it. We just did nothing for 2 years. So all the money that we made and we would have spent for 2 years, because we would have been out and about or going on family vacations, or, spending the money at this place or that place, we possibly didn't do that. So a lot of us have the extra cash, hanging around that we didn't have before. So
let's talk about this program that, instead of, like my son, God bless them, they decided to get married in Greece. And I told him right off the bat, you could buy a house for what that's going to cost.
Oh, yeah.
Let's talk about that program, that GoFundMe thing. I think I've always been really impressed with that. I guess just maybe being a father, thinking about, what kind of future maybe kids have. And sometimes, and I don't know, maybe it's because I've been married multiple times that I think a big wedding is a waste. I'm just kidding. I shouldn't say that. But my point is, I'd rather buy a house that's appreciating than a relationship that might not be. I shouldn't have said that either. But anyway,
you're in trouble. He's in trouble.
But seriously, this
man walking.
This GoFundMe.
Well, first of all, let's make sure we say the name right, because you're marketing a different company altogether. So it's called Home Funded, because I'm going to get my hand slapped because you're saying the wrong name.
I'm sorry.
From a trademark standpoint.
My glasses steamed up.
I
feel like I
it's like watching a train wreck.
Feel the wrath. I could feel the wrath.
It's coming. Hey, so yes. So love that you brought it up, because we're helping more families. So whether you are, this is a great program to support.
What's it called again? Just
it's called Home Funded.
Home Funded.
Yeah, Home Funded.
Home Funded.
Now keep in mind, we did have our name say something different on the last word, and we got in trouble because it sounded too much like the other. So I'm not going to say anything, but it's Home Funded. And it's a great program. To learn more about it, you can go to homefundedtn.com, and that shares more about the details. But whether you know of a graduate or a bride or a parent to be, or even a first-time home buyer.
What about a husband? Not a husband? You said a bride.
Or right, it could be a husband. Correct. Whoever is, coming together. Many people love to register for maybe a department store, and we say, why register for, China that we never use, when you can register at Home Funded, and then you can have all of your wedding gifts go towards the purchase of a new home. And so we just recently helped, actually, he's a local owner of a real estate firm. His daughter, she's so smart. She went to local BGA and then went to Clemson, and she's moving right along and going to do great and big things and make Franklin proud here. But she wanted to utilize this program to buy her first house, and her master's, I think, and her job is going to be down in Florida. And so I got a graduation card for her graduation from Clemson, and it had right on there the QR code for me to be able to scan that and send my graduation gift there. And all all that money went to her to be to the program. So it's a crowdfunding platform, and all the money was able to be raised, and she used that towards her down payment and her closing costs. And what's also super cool is that CMG matches up to a certain dollar figure. So for every dollar sent, we match up to I think it's up to $2,000. So it's an extra little perk for everybody to contribute. And she raised great funds through her family, her extended family, her church members, all her social media friends, and so she was able to do that. I think she crowdfunded for 4 months, and so you have up to 12 months to do that. But again, those graduates, think about creative marketing for you as a real estate agent, right? I used to do a lot of the bridal shows, and that's something that's now finally coming back. But love to connect with anybody that's out there thinking about those. Again, the parents to be, right? You already are marketing that, maybe their house is too small and their family's growing, and you need to, help them find a bigger home. Well, add the home fund it, part of that as well. So,
and for all the cynical parents like myself, they'd be that much more excited about putting that money towards, a house than a blender or, whatever else.
Yeah, absolutely. And many people nowadays, some are still getting married younger, but some are getting married older. They already have 2 sets of everything, usually 2 houses that are coming together and bringing into one. And so being able to purchase that house together is kind of a cool thing. So you have to be
getting married. You can't just say, I'm going to get married.
First of all, anybody can use this program, just so you know. I'm just highlighting for creative marketing ideas, but, Monty challenging me all the time.
Connie and I could get married again is what I was wondering.
Maybe. I think you're tapped out.
Well, at this point, I don't know. She might be like, you're out.
I take that personally there, brother.
That's a good one. I like that one. Save that one. I love
tapped
it.
Out. Come on, man. 4th time's the charm.
But for those real estate agents out there that want to know more about how you can connect with more folks, we give you your own personalized link, and you can start to share the stories out there. And again, I just recently posted a great video that Mackenzie just was so well spoken on about the program. So you can learn more about that too if you follow me on social media.
I think an agent could pick up this idea, Carrie Ann, and just really build a business around that, following the various news regarding somebody getting married, and make this, just be the guru on that. I think that could be your whole business model.
Well, and what's the perk for the donor? Well, here's a huge perk. So a donor in regular financing world has to sign a gift letter. They also have to provide proof that they have the funds. So there's a lot of extra documentation. Through the process, through Home Fund It, there is a click of a button that this is supposed to be a gift, and or the donor can just have the funds. So let's say that the buyer decides after crowdfunding that they don't want to buy a house. Well, to protect all the donors, all the money that was marked that it's to go to a home will go back to the donor. And then the money that was not, it was just as a gift, will go to the actual individual. But that is a huge win for the donors because they can give up to $5,000 without any documentation, $10,000 to $5,000. So it's just you input the data. That's similar incredible. To the other program that that's out there. But what's different between our program and their program is we don't have any transaction fees. So for every dollar goes 100% that dollar to the buyer. So that's a cool thing as well.
That makes it worth everybody's admission fee on this podcast. Just that I'm telling you, somebody could tap into that and really become a guru at it, and go look at all and do some brainstorming, all the different resources, all the different people who could use something like that, and you become the hero in that environment. The go-to person that's a hero.
Yeah. So this may be coloring outside the lines, but as big as religion is, could a church use that for expanding the church? Because they do the what do you call the well, not the tithes, but whenever you offer for building funds. Yeah. Is that something?
Yeah, I think it's per each individual, but if the church wanted to think bigger, they could set one up, and people want to give to, this member or that member. I think you're saying something a little different. I'd have to research that a little bit more.
They're wanting to build a building. Like we just went through this.
Okay.
And you would do a building fund where you donate money for the building fund to buy a building. And I was just thinking, well, you're buying a house. Could that work in some kind of sense?
They'd have to finance it.
Well, but you could pay.
It'd be commercial property.
Yeah, but so this would be residential.
So it's only
yeah, because we only focus on the residential, but they could do they could build a home for another family.
I see what you're saying. So not a commercial. Okay.
Right. So just not commercial. But I like where you're headed, because no one's saying you can't raise 50% of the money down.
Right.
You know, I mean,
right.
you will finance the difference. So,
Right.
I mean, you could be really creative, with that. And remember, being the CEO of your own business, you're like, well, that's going to take so long. Well, you're going to need business tomorrow. Right. So we're already thinking about tomorrow. So you,
Right.
again, think of your business as a big pie, like, Jason kind of trains on, and there's sections, right? You need to be diversified with each part of those sections, and this is a great section to focus on.
It's about getting those additional tools in the tool belt, so it increases your value, and you're the reason why you're the go-to person for all the multitudes of know, like, and love you.
Yes. Well, we're just so grateful for every opportunity, and love working with all of our RG family and many more. So, but am I scared? Am I scared? Am I scared? No. We've made it through some other difficult times. We're going to make it through, this time as well. But it does take that seasoned professional, that one that's really working on their craft, right? The one that's thinking different, that one that's pivoting, and thinking outside the box. So again, what got us here won't get us there. So this is the year to be different.
Mental toughness. I've been talking about on Monday morning huddle calls. You got to have that mental toughness, guys. But I saw the local real estate agent count at 5,000 dropped to 2,000 in 12 months' time back in the Great Depression, and I don't think it'll drop that low again. Hopefully not. But in that transitional period, those who find out, wow, this is harder than I thought it was going to be, they start going wayside, and guess what? That pie starts getting a little bit bigger when it does turn back around. So,
absolutely,
mental toughness.
Yes,
and pivot whenever you can.
There you go. Love it. Well, thank you so much, everybody, for joining us. You've been listening to The Talk of Music City Real Estate.